Hey everyone, it's Evan here from the Trade Risk on Wednesday, June 21st, here with a midweek market recap video. We're going to cover all of the major markets, the current market environment, and then finish off the video looking at some sector analysis. Now, it feels good to be back. It's been over a week since I believe I posted the last video update. I've been across country, traveled home for a wedding, visiting family and friends, all that good stuff. I'm now back into routine, so hopefully on track here going forward. And thanks for everybody who sent a message asking, hey, where are the videos? Where's the weekly newsletter at? Hopefully now it is back on track. So let's get into markets here, see what we missed. S&P 500 SPY ETF was a rather boring day today, down just 7 cents here, but we did have some action to start off the beginning of the week, so let's discuss that. Let's first point out here that the S&P 500, the SPY ETF, recently went ex-dividend, so you want to be a little careful here in the near term looking at these levels because this chart is skewed just a bit more bearish than it otherwise should be. So to map those technical levels a little bit tighter, we should really be looking at the cash market here. So here's the cash market. You can see we're a little bit higher in this range. We're not quite at the lows here like the SPY is depicting right now. So just keep that in mind. Depending on your platform, may need to account for that. So here is the cash market S&P 500. What you'll notice is we are down here on the day, and really what we want to pay attention to is what happened at the beginning of the week. So Monday, you can see we had this strong pop up, almost 1% to the upside. That was a new all-time high. We broke above the last 2 weeks range and we cleared above this resistance. That was a pretty impressive candle. That was a pretty impressive way to start the week. But notice it did not maintain. We did not hold that strength. We got no continuation. In fact, we got the exact opposite. We saw a retracement of the majority of Monday's move, and that for you active traders is going to be a short-term sort of sign of either buyer's exhaustion or some type of rug pull, or whatever you want to call it and label it. It's a point to take notice, right? And that's usually the way I frame it. It's a day to take notice when you have a nice kind of breakout to new highs, and then the next day all of that's completely reversed. It's kind of like that quick oops, no, we actually aren't ready to continue higher. Now again, active traders, short-term participants, if you're on that longer-term horizon, even longer-term swing traders or position traders, you're looking at this weekly chart and you're saying, hey, look, we're still up on the week. We're above a rising 8 and 20 period moving average. Nothing is wrong here. Let the noise be noise. Things still look good on this time frame, and I completely agree. So again, be very mindful of just what your time frame is. For the active traders, again, this is a day to take notice, day that we certainly adjusted some of our exposure and risk, just because when you get those short-term clues to say, okay, we're not really ready to hold on to that upper level momentum, we just want to make sure that we are sort of aligned with that thesis. So basically, the way we're looking at this here, 2442, that's our rough line in the sand here, and it was basically today's highs. The longer we stay below this resistance level, which is essentially the last few weeks' highs, the more, just call it neutral, not necessarily bearish. For bearish, we would really need to see some follow through here. We would want to see us break through support. We really haven't done that. We failed to hold up to these new highs, but we haven't quite broken down through any significant support, and that's really would be the bigger flag that gets thrown up and brought to our attention, is if the S&P 500 continues to roll over below 2420, and then really 2400 is the big mark here. That's the big breakout from a multi-month range that happened in late May. So that is sort of the way we're looking at this landscape. I think, again, just to reiterate, this upper level momentum kind of got deflated here over the past couple of days. More of a sort of neutral landscape here. Doesn't mean you can't own stocks. It just means perhaps a little more selective, or adjusting exposure as you feel fit. And again, if you're on that longer term horizon, you may not care too much about even what happened over the past couple of days. Volume was relatively light, if I'm not mistaken. Yes, it was over the past 2 sessions, 3 sessions, all of this week, really. So that's the S&P 500. Let's tie it in with some of the other major averages here. So we'll go to the IWM, which is down on the week, down about 0.5% right now. And you can see we're back to this pesky sort of 139 level. For you guys who've watched a lot of these videos, you know I've had this 139 sort of line in the sand in place, and it still mentally is. I've removed it from this chart, but really I want to see the IWM hold in right about here. We want to see it hold the upper end of this channel and eventually try and kind of break out from these highs. That's the bull scenario. That's the ideal scenario. The longer we kind of stay weak, and if we start to hold back below this 20 period, then again we're sort of back in this position where we could roll over and start to come back to the bottom end of this range. So we want to keep, we want to stay cognizant of that. If we're going to hold, I'd like to see us hold right in here. So I think tomorrow will be a pretty important day, at least the way I look at things in the short term for the IWM. Let's see if it can find a bid here and pop itself back up above 140. And then the NASDAQ 100, I think the last update, video update I made was on this day right here on the 9th. And you can see we really haven't gone too far from where we closed back here on the 9th. You can see we haven't got any follow-through, meaningful follow-through lower. We haven't really retraced a great deal higher. We've really just kind of bounced around in this let's say 3-point range in here, and today, given the close up 1%, kind of poking up to the highs here from back on the 14th, this is going to be interesting to see if we can get some follow through tomorrow. Now, the one thing I'd point out here with the Qs, pretty impressive outperformance today. That is largely helped by the fact that Biotech was on such a strong rally over the past few days, particularly today as well. Something that I probably don't even iterate too much myself is that Biotech does have a meaningful percentage of the NASDAQ 100 of the Qs. So Celgene, Gilead, Biogen, these types of names, these big large cap biotech companies are a decent makeup here for the Qs, so that's something to pay attention to. They certainly helped, lead the market, turn the Qs into a leader here of the major averages. So that's something to keep in mind. And again, the way I'm looking at the Qs here, we're still in a position where we're making higher lows and higher highs. We have seen a tremendous amount of volume kind of shape through here over the past 2 weeks. Can we continue to retrace more of this? Can we get back up to these old highs, or are we going to fail right here at approximately this 141 level and start to head back towards these 137 lows? Again, we still have a higher low in place. If we start to get follow through to the downside, that would be certainly the first signs of a more meaningful pullback, something we haven't seen in quite a long time for the NASDAQ 100. So that's still what I'm waiting on, and for now it's just kind of a it's kind of a wait and see for me. I would say in the short term, this is a pretty nice, even short-term bullish pattern here. If we forget about this, kind of ugly day here, and let's just take a look at this right here, the past 4 sessions. I like how this gap from the 19th is held. So this gap here never got filled. We had this lower day yesterday, but then we popped back above and then closed near the highs. That's generally, this kind of little combo 1-2 punch pattern here tends to lead to some more follow through to the upside, at least for a short-term trade. But again, you get this very loud session here on the 9th, so you're kind of pushing, you get that kind of pushing in the other direction. So you got to be a little careful there. Nothing that I'm positioned in, so take that with a grain of salt. So that's the overall landscape. I think the bulls still have the edge, but there are some signs again that it's maybe time to be a little bit cautious, but again, I say that very carefully, really going to come down to time frame and strategy. So that is the landscape. Let's look at some of these other major markets here. TLT, last update we made here was back on the 9th, talked about using this pullback here as an entry. That was the trade that we put on here in TLT, and so far it's working out. Still hold a position in the TLT, and I still like this. You can see if we zoom out here, we're coming into the gap, the open gap back here from November of 2016. This is again an unadjusted chart for dividends. If you were to look at a chart that has dividends, things are going to look a little bit differently, but I continue to like TLT. I've liked it ever since it broke out above 123, looking at dips as opportunities. and so far it continues to work. Is it a bit stretched? It is, you know, and until that changes, really going to just try and stick with this near-term trend. So still have a position here in TLT, or in TMF actually. That's, you know, that we're looking for higher prices there, and our stop is certainly getting trailed a lot tighter at this point as this rally extends itself. So that's TLT, still pretty bullish on it, but aware that it is kind of a chase play at this point. USO, we'll go there next. So this has been getting hammered here over the past few weeks. You can see we broke below the May pivot, the May lows, and we're continuing to kind of sink at a pretty fast rate. You can see volume continues to be upticking here on the sell days. Still looks like it's distribution all around here. Would not really want to get in front of it. Are we oversold? Yes, we are. Can you be nimble and you know, play for a bounce? Sure you can. But structurally, USO oil here looks like it's just in real tough shape. It looks like rallies are being sold, and that's the way I would want to be positioning into this. So I don't see anything more meaningful at this point here to make me want to you know, jump in and fight this. Again, if you're more tactical, the volatility here, you could probably you know, get some two-way trades going. But for me, sellers in control, uptick in volume. I'd respect the downtrend at this point. Natural gas, not as extreme here, so we get a little bit of a different scenario. Right, so we got UNG, which is now back to our $6.50 low. This was the low made in February from earlier this year. Notice it is retracing and getting back to these lows on pretty light volume. So that's actually maybe a semi-encouraging aspect there, that we are getting back to lows, light volume. We're not seeing it pick back up. So this is something where we want to pay attention to this level. For you guys who like you know, these double bottom plays, or looking at prior support for a potential reversal or a bounce buy, pay attention to UNG. I'll be looking at it. Still not my favorite setup, but something to pay attention to see if we can start to stabilize around these levels. Finally, if we go to the metals, you can see GLD kind of in a messy situation. It failed to hold these highs, take out the highs here from April. So when we got back up here in early June, it failed to really clear these April highs, and it's pulling back. So it's just kind of doing this, you know, mostly sideways wide wave pattern here. And again, we'll need to see if you know, until that changes, really not a whole lot to say about this. It's just kind of in no man's land the way I'm looking at it. The trend is lower at this point, so I'd, you know, stick with it. Weekly chart, let's take a look at what that looks like. Yeah, you can see, you know, this 116, 115 level, 116. This is going to be, you know, the lows here from May. That'd be a point of to pay attention to, and then you get the highs from the double top that we just made around 123. So kind of sitting in no man's land, not much else to say about it. Silver, back to at least a more actionable sort of reference point. If this trend line can extend here from the December lows to the May lows to where we're coming in now, maybe there's some influence, maybe there's some support that comes in around this level, but getting close to the May lows, getting close to this trend line. Let's pay attention here to see if it can bounce. Weekly chart, again, you can see kind of in no man's land, a little bit more of a bearish picture here in silver, just the way these moving averages are positioned. So really not an A+ setup for me. I'm not paying too much attention to either gold or silver here at this point. So that I think covers all the major averages. Markets, let's look at some of the sectors. So you know, clearly today, XLV healthcare, it's been tremendous leader here to the upside ever since it broke out to new highs back here in the beginning of June. It's been accelerating higher at this point. Again, this pattern looks real strong here on the weekly time frame, monthly time frame. XLV, certainly a leader, certainly a place where money is rotating to. Specifically today, though, biotech as a subsector here has been really on fire, up 4% today in the IBB. And I think what's very impressive here, I mean, the volume, see the nice uptick over the past couple of days. That's impressive. We took out this long-term resistance that has been in place right around $300. And if we go to the weekly chart, you can see just how sort of significant and clean this breakout is. So from a short-term perspective, yeah, maybe we're overbought. I mean, I guess there's no way to dispute that on most metrics. We are going to be overbought, but from this bigger bigger picture structural play, this is a nice basing pattern that we're emerging from. So depending on your time horizon, IBB could be getting started here for some of you guys that are looking out 6 months, 12 months, 18 months or so. This is a pretty nice looking breakout bar, 8% uptick in volume already, and we're only 3 days into the week. So IBB quite strong. XBI is the equal weighted biotech ETF, and again you can see similar behavior, uptick in volume, clearing long-term resistance here, and weekly chart equally as impressive, looks pretty good. So XBI, Biotech looking pretty much good on all fronts. Now, those are the leaders that we have right now, definitely the standouts. If we go to the opposite end of the spectrum, the laggards, we got energy, which is no surprise given the fact that oil is kind of just continuing to roll over here. Now, we did kind of point out yesterday that we did have a bit of a divergence forming with this hammer, potential hammer here at the lows here from June. You can see we're starting to break back below that now. So XLE does seem to be trying to hold up a little more in a resilient fashion than oil is falling. However, still in a downtrend, still in this down channel, and it's really been tough to pick a bottom here. So XLE continues lower, continues to be the laggard, and again on a yearly basis we're down 15% in energy. So definitely just really continues to be the sore spot in the market. Now if we move on to some others, XLY, so the discretionary ETF getting a little bit messy in here. You can see we're trying to carve out support right at this $90 level, $89.75, but you can see we're kind of now pulling back to last week's lows, and it's going to be interesting to see if we can hold on to that. You can see the weekly chart maybe getting a little sluggish up here, but again, we'd really need to see more of an acceleration lower to get more concerned about it, but certainly not participating at this point to the upside. XLP also starting to get a little bit more of a some sell pressure here, and we talked about how we really like this setup as it emerged from this base here, from this multi-month base, but you can see ever since this kind of lower high double top, we had this gap down and we really haven't recovered. In fact, it looks like it almost wants to roll back over. So XLP a bit in a vulnerable spot there. We're going to need to see if that can stabilize and put in a higher low and hold this breakout level. And then finally XLI also seeing some pretty good follow through today in the industrial ETF off of yesterday's selling pressure. Volume pretty low over the past couple of days, all this week so far, so I guess not a whole lot of concern there, but you can see the 20-period moving average hasn't closed below that since back in mid to late May. So we're going to need to see if the XLI can hold on here. Otherwise, we have potentially sort of a bearish engulfing week there. So really, we have a lot of sectors that are in, they're kind of coming into support right now, and we want to see, can they hold? Can we get some rotation into some of these names? Because really it's biotech that's shining pretty bright. Semiconductors and Qs, they're at resistance right now just from the big cell technology essentially. Really again hasn't been able to recover too much more from this big loud breakdown day back here on the 9th. So everything kind of at an interesting sort of flux spot. We want to pay attention to how this market moves into the end of this week, how it closes. I think we're at a pretty interesting spot, all things considered. So that is the weekly or the midweek recap. Thanks so much for watching. If you're new here, I'd love to have you subscribe. We put out these videos every few times a week to keep you up to date with what's going on in the markets. Thanks so much for watching, and talk to you guys again soon.